Good morning everybody and welcome to this SmartCharts European session. Hope you're all well. Alright, so we're getting into the higher impact news announcements of the week, and really today the big focus across the day is going to be the start of the US job openings figures, the US JOLTS report. And this is a big week for US employment data. We have employment data coming out all throughout the week, and of course, you know, employment is so important for the state and overall health of the economy and consumer spending and overall inflation. So it can be a bit of a market mover, so we need to be mindful of the US dollar this week. But the JOLTS job openings is a key report, because if you remember in November we were looking at the job openings report, and this is when the US Federal Reserve, they actually cut interest rates much bigger than expected in that October-November period, and it was because of the job openings report that they were concerned that there wasn't too many new jobs opening in the economy, and that's what actually caused them to cut interest rates a lot bigger than the market was expecting. So it can have a huge impact, so we'll keep an eye on it. And just to get a bit more detail regarding that report, so the JOLTS job openings is simply a report showing the number of job openings during the reported month, excluding the farming industry. And of course, job creation is important for overall economic health. It's a big indicator of consumer spending, which impacts overall inflation, the price of goods and services in the economy. And of course, inflation is the metric used by central banks to determine interest rate policy. Okay, the forecast is for 7.73 million new job openings. So again, why do we look at these news announcements? So first of all, number one, risk management. Markets are quite correlated, okay? So the currency market is quite correlated. When there's a big theme, you might see all the clarity just on one currency. So if everyone's been piling into the US dollar, then you might just see all the trends, all the clarity, all the setups on the US dollar pairs, right? Because that's where all the money is flowing into and out of. And so you can often have maybe quite a few trades on the same currency. So you need to be mindful when you're coming into high impact news announcements that you don't have too many trades on the same currency, you're not overly exposed, because if there is a surprise and the market goes the other way, then you might get hit on all your trades. So, you know, risk management always very important. Second reason we keep an eye on these news announcements is for any big surprises, okay? Because we know from your day one tradification workshop or your 3-day Learn Forex program how the market works, how the flows are created by the larger institutional speculators, and the different divisions they have on their trading floors. And fundamentally, we know everything is already priced in, okay? So when there's a surprise news announcement, this catches people off guard, they've got to readjust their positions, and that can sometimes lead to some really big moves in the market, which are sometimes tradable, sometimes it's a bit too wild though. But again, what do? We're here to look for the clues the market is presenting to us to give us a bit of an edge in what could happen in the future, and it's about stacking all these different clues in our favor, technical clues, fundamental clues, so as many different clues we can have in our favor, the better, okay? So we look for any major surprises, maybe that can actually start off a trend, or in the case of the US dollar, we've had some very strong trends in the US dollar for the past several months actually. So we've had Euro US dollar, Pound US dollar, Aussie US dollar, Kiwi US dollar, all trending lower, okay, for quite some time. We've had, you know, dollar Swiss, dollar CAD, dollar yen going up, okay. So right now we're just sort of in a phase 2 kind of situation in US dollar. We've seen a bit of profit taking to start off the year. It'll be interesting to see if we're going to come to the end of phase 2 and the beginning of phase 1, which is going to continue the trend that has been developing over the past several months, or if we're going to get to start, if we're going to see more of a trend reversal, right? Because we have a lot of US dollar news announcements this week. It could be an opportunity for some of the longer term players to actually start taking some profits at the table. So we're going to be aware of both sides of the coin this week, but then that will set the trend very nicely then over the next few weeks, and maybe even for the first quarter of the year, okay? So let's get an update on some of these US dollar pairs and what's going on in the market from a technical analysis perspective, and head into SmartCharts. Okay, so we look at the tools tab here. So something that we did highlight actually at the beginning of the week is that this week we've had a lot of strength in the commodity currency. So New Zealand dollar, Canadian dollar, Aussie dollar. So we've had a bit of strength there, and we've noticed that the US dollar and the yen have been particularly weak. And we know that actually over the past several months, the US dollar has been really over here, has been one of the strongest currencies, but we'll be dealing with a bit more profit taking. Okay, so we're dealing with more phase 2 cycles on those dollar pairs. So when we're looking at the currency strength index, okay, it's very useful, by the way. If you're a fast time frame short-term trader, then you really want to be buying the strong currencies and selling the weak currencies and pairing those up, okay, because we know currencies are paired, aren't they? When you're buying one currency, the other one is falling, right? They come in pairs. If you're more of a medium to higher time frame trader, then you might be looking at them saying, okay, well, look, the US dollar is a bit weak right now. Okay, is that coming into some really key levels of like resistance, where maybe there could be some profit taking, or maybe the market could turn, right? So sometimes if something's very strong, very weak, it might be moving for a while. If it's coming into some major levels, then you might be looking for some profit taking, some turning points. So it can become quite useful just to help us to understand where the flows are. Where is the activity? Because of course, from the institutional perspective, they're not buying and selling everything every day, right? Obviously, the market is going up and down every single day, because what are you looking at? You're looking at natural currency conversions that are being done around the world by businesses, central banks, governments, organizations, airlines, car manufacturers, who are converting currencies to facilitate the global economy, right? But from a speculative standpoint, the institutional players, they work on global macro themes, right? So we want to try to identify, okay, well, where is the money flowing into and out of? Where are the speculators positioning themselves? So this can be very useful in helping us to determine that, okay? And because the US dollar is quite an interesting one this today and this week, if you go to the charts tab and if you go to the 180 phase changer strategy, one setup that's been highlighted on the London and Sydney trading floors is Euro US dollar. Now the phase changer strategy is one that helps you to identify and trade momentum trends. Okay, so we know in the market there's different types of market conditions. You have different strategies inside of SmartCharts to help cover a variety of different conditions. This could be momentum trends, long-term trends, short-term trends, complex corrective wave cycle trends, super cycle trends, ranges, consolidations. So instead of you having to try and find all those things yourself, SmartCharts will actually help you to identify those different types of conditions. And on this particular strategy, it utilizes moving averages, the yellow line and the blue line, and moving average just gives you a simple line of price direction, okay? And it utilizes relative price patterns such as ring highs and ring lows. And on top of what SmartCharts is finding, and again, if you're not familiar with how SmartCharts is helping you, just make sure you're reviewing all your e-learning materials in the Learn tab, you're attending all your online classes, workshops, webinars in your live events tab, and attending your coaching sessions as well. But what we want to be doing is utilizing the power of AI algorithmic technology and also using a bit of human insight pattern recognition. So as many of you know from the trader certification workshop, for me personally, I look for just one or two extra things. That's it. Okay, consistently looking for those one or two extra things across all the different strategies. So very high level of focus. Every single day I turn up to the market, but that level of focus and just looking for one or two things, I can use that to help cover a variety of different asset classes and a variety of different market conditions. So covering a lot of ground with a very simple focus. And of course, the absolute game changer of utilizing technology in SmartCharts is that because we have a very simple focus of looking at one or two things, we can take that, training condition ourselves to build the belief and confidence in what we're doing through the back testing and forward testing work, right? Helping us to turn up every week with the belief and confidence and actually following the plan and playing the probability game. So multiple benefits in utilizing the power of AI algorithmic technology. So what are the couple of things that I look for? So the first thing that I look for is that I just want to make sure speculators are also building positions in the market, because there is a fundamental narrative on why they're doing so. And we can see that technically here, because what do we have? We have this lower low, lower high cycle. We have turning points in the market getting lower. So we've got evidence of institutional speculators. They're selling this market at high prices, but they also have been willing to keep selling beyond low prices. So maybe there's a high probability chance they're going to keep on selling at high prices and the trend will continue, which is what we look for as trend traders, the trend to continue. Okay. Second thing I look for, I want to see some other areas of resistance or support on the chart. So I can see visibly, all right, well, sellers maybe could turn up here again, as I can see they've been turning up here before. So you can see actually here, we have this angle of price, we have this trend line that has been developing on the way down. So consistently, sellers have been turning up at this angle of price, okay? So if you click on like your pencil icon, for example, and then you click on the rate tool, then we're at this angle of price where sellers have been turning up before, so maybe they could potentially turn up here again. So what we have here is a confluence of resistance areas where maybe sellers might decide to turn up here again and continue this trend lower. Okay, so on top of helping to identify potential trading opportunities, SmartCharts will also help to do the risk management work, which is by far the most important. So if we click the down icon, it will populate an entry price of the blue dot, stop loss of the red dot, target the green dot, which can all be adjusted according to your own user preferences. It will do the percentage risk calculations, reward to risk calculations, and currency conversion calculations for you. And then we just set an expiry here at the bottom. I like to set a current bar close expiry and decline or accept the trade. And what that means is, if sellers don't actually turn up, okay, and continue this downtrend and get to the entry level by the time this current daily bar closes, then this will just expire. Didn't win, didn't lose, didn't cost anything. If they do decide to turn up and get to the entry level and trigger into a live open trade, then either it goes to the target level or it goes to the stop loss level. So either it turns into a winning trade or it turns into a losing trade. Okay, now something to bear in mind, we have a lot of US dollar news announcements this week, okay? So if we do not get the continuation in the US dollar trend that has been developing for some time here, and we break this trend line, then that will be a new piece of information, and then maybe we'll be looking for some trend reversals by the end of the week or next week. But of course, we don't know. We can only focus on what the market is telling us to do today in the present, and if we're consistent in doing that, that's how we get the consistency in performance. Okay. All right, so look, that is it from me. Plenty of other things going on in the market. Make sure you're tuning into all the other live trading webinars happening out through the day, help you to identify and participate in other trading opportunities as well. But in the meantime, that is it from me. I'm going to wish you all the best for your trading. Bye for now.